A whale of a tale for the crypto world, a Kraken chat with the SEC is making waves, and I promise I have no more nautical puns, I swear. Hey there and welcome to Crypto Corner. I'm Jenny Horne, and it's time to dive into the latest moves in Bitcoin, Ethereum, and more. Joining me now is Adam Lynch, Director at Schwab Equity Research. Okay, first and foremost, dive. I swear that was actually the last one, but Adam, we have to start with the shocking move over the weekend that some dubbed a flash crash for Bitcoin.
Thanks, Jenny. Yeah, it was a pretty wild weekend after last week's meeting out in Jackson Hole, where we heard from Fed Chairman Powell and others in the industry. On Sunday, Bitcoin's price dropped nearly 3% to under 1100,000 after a whale offloaded 24,000 Bitcoin, or more than $2.6 billion worth, by actually swapping Bitcoin for Ethereum. Now, this wallet actually continues to hold over 100,000 Bitcoins, so people are keeping their eyes on it. The drop in crypto prices, though, that this transaction caused helped fuel liquidations of over $200 million of both Bitcoin and Ethereum before the market stabilized later on in the day, ending up around 113K or so as Asian markets opened on Monday morning. Now, despite the drop in Bitcoin price, Ethereum's actually held its level a bit more firmly, maintaining a price around 4,500 to 4,700. Some analysts are saying that these early Bitcoin whales, like this person, as well as institutional investors, are rotating exposure from Bitcoin to Ethereum, betting that the pending Fed rate cut could lift Ether more than Bitcoin given its smaller market cap. Now, this institutional buying, along with all the Ethereum treasury allocations, has just added additional tailwinds, feeding speculation that even with all the talk about Bitcoin, Ethereum could be becoming Wall Street's blockchain of choice.
Yeah, and I'll be very curious to see how that continues to shape up, as we've discussed pretty thoroughly that Ethereum has been the laggard a bit when looking at just the performance on a year-to-date basis. But also to dive into crypto exchange Kraken reportedly meeting with SEC's task force about tokenization. We've also spoken about tokenization, of course, before, but why was this meeting so significant?
Yeah, so on Monday, Kraken met with reps from the SEC's crypto task force to essentially discuss the tokenization of traditional assets and a tokenized trading system. Now, the agenda was essentially to discuss this system, the regulatory framework and legal requirements for it, as well as just the general benefits of tokenization. The meeting comes at a time when traditional exchanges and global regulators are pushing back a little bit and urging the SEC to take a stricter regulatory approach to tokenization. These groups claim that assets like this lack the investor protection safeguards that are present in traditional markets. Now, there are a few platforms out there that are offering these types of trading services with tokenized stocks and things like that. But currently, the market for it is pretty small, although it is emerging. The total value of the tokenized stocks in circulation right now stands at about $350 million, which is actually down over 10% over the past 30 days. Now, why is there interest in this tokenization? Well, there are generally stated benefits to it, right? Fractional ownership, 24/7 trading, faster settlement, increased accessibility, all of those things. But maybe more importantly, from the business side of things, is that according to Binance Research, tokenized stocks represent $1 trillion opportunity. In fact, if just 1% of the entire global equity market was tokenized, it could propel the sector to surpass $1.3 trillion in market cap.
Okay, and lastly, as we mentioned previously, Ethereum, but we've been very focused on that run higher over the last month or so. But there is still one group that sees it as undervalued. So walk us through that narrative, that way of thinking.
Sure. We often hear wild predictions from the so called crypto cheerleaders, but this week something came across the wire that caught my attention. So, Standard Chartered, which is a British multinational bank as well as sponsor of Liverpool, the world's greatest football club, came out and said that Ethereum and these Ethereum treasury companies look cheap, even at today's all time high Ethereum price levels. So, the bank's head of digital asset research, a guy named Jeff Kendrick, made his case in comments sent out on Tuesday. He pointed out that since the start of June, Ethereum treasury companies have bought up over 2.5% of all Ether in circulation, When we combine that amount with the amount that's flown into the Ethereum ETFs over the same time period, those two have purchased a staggering 5% of all the Ethereum in circulation just since June. Now, Kendrick thinks this is just the beginning. He's estimated in the past that these treasury companies would end up owning somewhere around 10% of all Ethereum, which is a goal that definitely seems possible given today's activity. He's got a year-end price target of 7,500 and even thinks that the valuation of these Ethereum treasury companies, folks like SharpLink Gaming and Bit9 Emergent, are actually coming in line and starting to normalize. Now, all things equal, he seems to favor these Ethereum treasury stocks over the Bitcoin treasury companies like Strategy, given their ability to capture Ethereum's 3% staking yield.
Yeah, and I will be very curious to know how that we continue to see that firm up, hopefully, and continue to see, some hopefully momentum to the upside as we'll be revisiting this conversation next week. But so appreciate it, Adam Lynch. And that's it for Crypto Corner this week. Be sure to subscribe to Schwab Network's YouTube channel for every episode and follow us on Instagram, X, and LinkedIn. I'm Jenny Horne. Thanks for tuning in.